Welcome, everyone. Thanks for joining us for our second webinar in the 2024 Quarterly Perspective on Tax Law series. My name is Marie-Claude Marcil, and I am a partner in Fasken's Montreal office in the tax group. I am joined by one of our Toronto partners, Timothy Fitzsimmons. Tim and I both specialize in tax litigation and controversy across Canada, whether income tax or indirect tax. And we're happy that you have made time today to join us for this session on managing tax disputes. Before we begin our mid-year update on recent developments and trends, I'd like to draw your attention to the survey and CPD certificate sections. At the end of the webinar, a QR code will appear on the screen and you'll be able to obtain your Ontario or Quebec CPD certificate today. And obviously, we value your feedback on our events and would appreciate it if you would take a minute following the event to fill in the survey. Now, on our presentation, we have a full agenda today, but we want to make this as interactive as possible. So please feel free to put in your questions in the chat, and we'll do our best to address them as we go. In any event, we'll make time at the end of our presentation for some Q&A. And we noted that we have a very diverse range of audience, so if you feel like you'd rather discuss some of our questions offline, you'll have our coordinate to reach us after our presentation. That being said, Tim will kick it off by describing where we are now in terms of enforcement environment. And then we'll move on to some recent developments where we will discuss the new legislative changes, some cases of interest, and what we have been seeing in terms of audit trends. And we will cover some best practices for dispute management. And finally, we will look at what is going on in terms of artificial intelligence. Tim, over to you.
Thank you very much, Marie-Claude, and good afternoon, everyone. It's great to be with you, and thank you so much for joining us for our mid-year update on tax disputes. Let's start off talking about the current enforcement environment in Canada. And in the recent federal budget, there were announcements that the expected deficit for the fiscal year just finished, 23-24, was going to be in the range of about $40 billion. The going forward projections show the deficit reducing to about $20 billion in 28-29. So we've got significant deficits for the foreseeable future. From time to time in the country, we have conversation around the tax gap. That amount is estimated to have been in the last few years in the range of $40 billion or so before compliance activities by the CRA. And apparently this roughly stays in line with estimates of approximately 7-9% of federal tax revenue each year. For the purposes of comparison, the US estimates its tax gap to be slightly higher than $600 billion, and the UK is in the range of $35 billion. Each of the countries talks slightly differently about enforcement actions and how to collect some or all of that estimated tax gap each year, but that's roughly the range that we're looking at. The CRA itself as an organization has recently surpassed 59,000 employees, approximately 35,000 of which are in the enforcement section within the CRA. By comparison, the IRS, which administers the tax system for a country about 10 times the size of Canada, or just under 10 times, has approximately 90,000 employees. The CRA's budget in recent years has increased significantly. The general framework being utilized, we understand that the government expects to collect about $5 of tax for every dollar invested with CRA enforcement. I think that that number has shown to be overestimated in the last few years, but generally that's been the working framework in terms of the investment in enforcement resources at the CRA. So with that in mind, Marie-Claude, perhaps you can talk to us a little bit about how the CRA is doing from the perspective of service standards and effectiveness and quality of the audit results.
Absolutely. You've shown the numbers, Tim, and what does that mean in practice? The most recent statistics that we have are from 2019 and 2020. CRA referred to 85,000 audits that would have generated approximately 13 billion. And 68% of those funds generated would be attributable to large corporation. A little caveat to these results is that there's about 3 billion that is not collectible. So if the tax administration's budget, like you mentioned, is about 5 billion and 3 billion could not have been collected, that's a profitability of only 4 billion. So you see that there's room for improvement. And that's kind of what we wanted to highlight on this slide. There had been two major reports in the last a couple of years. First, in 2008, there was the Auditor General that had harsh words towards the CRA regarding the timeliness of their audits. So we definitely saw that in the trenches, and I'm sure, Tim, you would echo my feeling. It has been and it continues to be very difficult to get a resolution at audit in a timely period of time. So if we look at back in 2018 for large businesses, you could not really expect the closure of an audit before a year. If it was something a little bit more complex, referring to aggressive tax planning, and we know that CRA's definition of aggressive tax planning is not necessarily what we have in mind. So we could look at almost 600 days for the close of an audit. And also what we still are seeing, practically speaking, is really a gap between the different offices. So, for example, I know that if I have a shred file that is sent out east, it will take substantially longer to treat than if the file gets sent out west. And even not just for audit, Tim, we can see even for simple requests for adjustments. Back in 2018, there was what the Auditor General had mentioned, a very big gap between offices. We see that still to this day. For example, if something is sent out to the Quebec region, unfortunately, it takes a lot longer to get processed than what I've been seeing in Ontario, for example. Interesting thing also to note is that audits, unfortunately, will tend to close out near year end. So that really creates some frustrations for the taxpayers that all have other matters to get to near year ends. And when you go through the audits and you move through objections, there's also some hurdles that you need to navigate. So the statistics are a bit more from 2016, 2017. But again, in the trenches, same thing, unfortunately. We need more investments to get things going and invest in more people to treat the objection processes, because we can't, even today in 2024, a complex objection will not get resolution before minimum a year and a half. That's my personal experience. And I know we have some folks from Quebec here. So a good thing for Quebec, it's actually a bit faster. There's some other hurdles, but Quebec has improved a lot in the last few years in terms of getting things done quickly. So that's the positive sign that I've been seeing in practice. And if we move, Tim, to the current enforcement environment, we've mentioned, the added budgets, the problems that we have at audit and objection. But now we're adding another sphere of new legislation, new reporting obligation. Can you take us through maybe some of the major news that we've had this year and the prior years?
Yeah, gladly, Marie-Claude. And so to build on what we've been talking about in the past couple of slides, we have obviously seen some significant changes in legislation in the last recent years. We have a new GAR, which we will be dealing with soon, which includes a new economic substance test and potentially penalties in certain circumstances, around which the biggest uncertainty, it seems, from our perspective, is how the new GAR will be interpreted and applied in the field by audit teams before we have any guidance from the courts, and that will take a number of years. It was at least a decade or so after the introduction of GAR before we had Canada Trust Co. So we've got an unusual and period of uncertainty coming up in the next little while. Keeping with legislative proposals, we have enhanced audit powers were proposed in the recent budget for the CRA. We're going to talk about those in a couple of minutes. I think as well, Marie-Claude, we have a development or transformation or evolution in terms of the perspectives that the CRA has taken, and generally around issues regarding tax ethics or fiscal morality or loopholes or tax fairness, whatever phrase or concept you want to or prism through which you want to think of this. Significant changes and developments, the moving of the goalposts, if you will, in the last decade or more in terms of our conversation around tax. That has shifted quite a bit. Companies that in previous years would not have ended up on the front page of the business reports may now find themselves in the subject of news stories regarding certain tax and accounting matters that previously would not have been the subject of news. And driven by certain international activities and efforts, there have been a change or proposals for changes around taxes on things such as excess profits, luxury taxes, wealth taxes, global minimum taxes. So changing perspectives from that view as well. And you layer on top of all of that continued developments in computing power, data processing, e-filing the data that's available to the CRA as a part of continued electronic reporting, and eventually artificial intelligence. So we're going to talk a little bit about that at the end of the presentation, but there are some interesting developments that we can expect to see in the next few years. As I've said to a few people in recent months, what a time to be alive in Canadian tax or global tax. We find ourselves at quite a moment. So all of this, I think it's fair to say, Marie-Claude, adds up to what you'd refer to as a challenging tax enforcement environment. Some may say an aggressive tax enforcement environment. And just to close on this slide with some thoughts on a recent conversation we were having internally here with some clients around some international tax issues, and the subject of challenging tax authorities around the world came up. And the consensus on the call was that jurisdictions such as Korea, India, Australia, and Canada have been identified as among the most challenging tax authorities with which to manage tax disputes. And some of you on the call may identify with that. So Canada, right near or at the top of that list in terms of a challenging tax enforcement environment. So with that in mind, Marie-Claude, why don't we go to some recent developments in legislation, and why don't we kick it off with mandatory reporting. Let's go over there to start us off.
Thanks, Tim. And that goes in smoothly with what you said. It's a new era. We're in an era where disclosure is key, and it's been difficult to change our mindset towards that. And I've been seeing this on the ground with my clients where, the team needs to understand that we're no longer keeping things close to our tax team. It's all about disclosure. And we've seen in the past 5 years so many legislative changes, like you mentioned, capital gains. Yes, just yesterday we had Bill 69 receiving third reading that included Canada's Global Minimum Tax Act. So many things to keep up with, but the most challenging for us, I think, in the past 2 or 3 years were the mandatory disclosure rules. And Quebec was ahead of the curve, came out with the mandatory disclosure requirements. So we kind of got our hands dirty right a year or so prior to the rest of Canada. But the problem is it has not been harmonized. So we have to keep up with two sets of rules that just keep on changing. And for us professionals, it's tough, but I can't even imagine for our clients that really have to rely on their team, but obviously on consultants, because there's still a lot of uncertainties. In Quebec, we've seen the start of some audits on these reporting, but very, very low. It's been just asking for additional information on the forms. I think that the governments were a bit overwhelmed by the number of disclosure forms that they received. It might not be soon where we see really the effect of those disclosure requirements. But like you see on the slide, the objective behind it was really to try to get timely, comprehensive, and relevant information to target important transactions that need auditing. That being said, I don't want to go into too much details, but federally, we have three separate regimes right now. We have the reportable uncertain tax treatments, the RUTTs, the reportable transaction, the notifiable transactions. RUTTs are very accounting based. The only thing I'd like to mention is that be careful with solicitor-client privilege. We know that accountants do not have these sort of privilege afforded to the flow of information. So during the determinations of RUTTs, there's a lot of strategy that can go behind it, involving lawyers and determining how much do you disclose and how do you phrase the disclosure. All that, if done only with accountants, unfortunately, will not benefit from solicitor-client privilege. Regarding the reportable and notifiable transaction, in case of doubt, disclose, because the penalties are very harsh. For example, you'll have 25% of the tax benefit that would have to be paid if there's a determination that a transaction should have been disclosed. And also the change in mindset, like I mentioned, Tim, reportable transactions are not for necessarily aggressive transaction. It could be very plain vanilla, because we're targeting, yes, avoidant transaction, but avoidance transaction is defined very broadly. It's just a transaction that one of the main purposes is to obtain a tax benefit. So as long as you have one of the three hallmarks, for example, you have a contractual protection. This could be an indemnity relating to existing pre-closing tax issues or existing tax attributes, for example. You would have an obligation to disclose. So now tax can't just be pushed to our year end. It has to be looked at in every transactions. And who has the obligation to disclose? This is still a hot topic, and just for our audience, this is still to be decided, because there has been a challenge, at least for lawyers and notaries, whether they would have an obligation to disclose such transaction. Right now, they're exempt from disclosure, but we'll have to wait until the decision on the constitutionality of the provisions. So if we go to the next slide, and something a bit more close to us, Tim, in terms of tax litigation and controversy, this is the first time in a long time that we see changes, proposed changes, because we still don't have legislation that really affect the taxpayers' rights and give even more broad powers to the CRA, don't you think?
Yeah, absolutely. So we've included the changes that were in the budget proposals, the first two of which relate to some procedural matters And then the second two relating to increasing the stakes, increasing the importance, if we want to describe it this way, of participation in the audit process in the latter two. These have been covered in detail elsewhere, so we'll go through them quickly. But for the first proposal regarding changes to the normal reassessment period, there are budget proposals that would extend the normal reassessment period in situations where the taxpayer was seeking judicial review of a CRA requirement, or during the time that a new notice of non-compliance may be outstanding. We see issues relating to the timing of the statute bar date all the time in files. And so in some ways, this continues to be a challenge for the CRA, given resource constraints, given the audit team's abilities to move quickly. The normal reassessment date is always critical in terms of when CRA may have to finish its work by. And clearly, there is a desire to find the appropriate situations in which that normal reassessment period date may be extended for one reason or another. On the second one, oath and affirmation, there is a proposed process by which CRA audit teams could obtain answers from taxpayers during an audit in the form of an oath or affirmation. And I think it's fair to say that you can see both sides of this issue, to the extent that an oath or an affirmation process may assist the CRA audit teams in being able to accept the correctness and validity and completeness of answers provided during an audit. That would probably go a long way towards increasing efficiency and finding efficient resolutions to audits if the CRA has something that they can point to and say that is a statement given under oath or an affirmation. On the other hand, that's a very formal process, and it raises questions as to who within the company may be appropriate to provide an oath or affirmation. How much background prep does that person are they required to do in advance of providing an oath or statement and an affirmation? Information in affidavits is given on information and belief. How knowledgeable must the person be? Who's the appropriate rep? And certainly there is a question in terms of the use that might be made of a statement provided under oath or in an affirmation. I'm not sure that we have a full scope of whether there's a deemed undertaking rule that may apply in respect of the use within an audit for this type of statement. So some uncertainty there that we'll have to scope out in the next number of years as these proposals are enacted and then we see them in use. The next two really, as I say, are directed at increasing the stakes, increasing the teeth in certain of the audit processes. Budget 2024 included a proposal for a new type of notice of non-compliance, which would be issued or could be issued where the taxpayer, in the view of the CRA, hasn't complied in full or in part with an audit query or requirement that is issued under the various audit provisions in the Act. The taxpayer that's served with a notice of non-compliance is subject or would be subject to a penalty of $50 per day while the notice is outstanding, to a maximum fine of $25,000. So again, increasing the stakes for participation in the process. This can be challenged directly with the CRA and eventually in the federal court. And while this notice of non-compliance is outstanding, the normal reassessment period doesn't run, getting back to some of the mechanical changes around the timing and how these audits will proceed. And finally, there is a proposal to implement a compliance order penalty under 231.7. And this is the provision that relates to the court processes that could be involved where the CRA has requested information and for one reason or another, the CRA has formed a view that a full response hasn't been provided or not provided in a timely way. So the budget proposes to now include a potential penalty under 231.7. There are already penalties that exist for contempt of court if the court issues an order under 231.7, but this new penalty would apply in respect in an amount equal to 10% of the aggregate tax payable by the taxpayer for the year or years to which the compliance order relates. So could be quite significant in terms of these two latest proposals around participation in the process and the financial stakes that arise as a result of these proposals. So with that, Marie-Claude, let's finish up on legislation and let's go talk a little bit about the trends that we are seeing in recent audits.
Absolutely. So I mentioned earlier, we do see a little bit of compliance related audits, but and I'm giving those trends for the last year or 2 years or so. Obviously, aggressive tax planning, and we put aggressive in bracket in because it's very subjective. A lot of GAR related audits are or alternative basis for reassessment with GAR or with specific anti-avoiding rules. A lot of talks and scrutiny towards international transactions and treaty shopping. Obviously, I think one thing that is gonna to be watched is everything that has to do with withholding tax. Right now, I have a few files dealing with that that are going to court. This is probably following suit from the Glencore decision. We're seeing a lot of activities in that environment. And still some audits relating to the CEWS. We had that discussion, Tim, you were surprised, but no, even though the CRA is taking a reasonable approach, I would say they're still auditing some of those claims, and those are still going strong. I have some that are still pending at objections. Shred also, unfortunately, this is really difficult in terms of audits and objections. Shred, more and more, we see them taking a very harsh stand and denying some of the credits claimed. High net worth related party initiatives. The first phase have been closed, so we're seeing new ones starting. The initial high net worth phase really lasted a couple of years, so I don't know how, and all of them were closed with very minor adjustments or no adjustments at all. So I don't know how CRA are going to continue with those initiatives and how successful they have been. Another one that I want to mention, especially in Quebec, is everything relating to payroll. Quebec has been very aggressive in that field, looking for businesses that have their head offices in Quebec, but that their employees don't necessarily report to work, that they work on the road. That's created a lot of challenges, and then the tax authorities have to agree between themselves, and it just drags on. It's very difficult. And GST, HST, mostly in financial services area. I would say there has been a lot of lobbying initiatives and no modification to the legislation yet. There keeps on getting decisions that are somewhat favorable, I would say, to the taxpayers, but still a lot of uncertainties. So the tax authorities are auditing and assessing until now that they still can. And real estate in Quebec, a lot of self-assessment. Unfortunately, everything that involves partnerships and co-ventures, they're in Quebec particularly, but also in the common law provinces, there seems to be a misunderstanding on how these vehicles can be used and how GST and QST works in those types of structure. And finally, with respect to court hearing trends, I was very surprised. In the last year, it was mainly GAR and GST, and the rest was a lot of interlocutory motions and cost awards, Tim. And I've been practicing for 15 years, and it's the first year where we've seen a lot of those issues being brought up, even to the Federal Court of Appeal, and that creates a backlog, I would say, within the courts for the interlocutory motions, because they even take time to render the decision, and the process gets stuck. But enhanced costs, it's something now that I advise my clients on. You have to think about strategy. If your lawyer takes a strategic decision on how to carry out your case in front of the court, you need to be asking questions with respect to enhanced cost. So those are things that I wanted to bring to our audience attention in terms of trends, Tim.
Yeah, and just to build on that, Marie-Claude, one of the questions that I get asked all the time, and it actually came up on a file this week, in respect of the court process, frequently clients will ask, how long will it take us to get through to a trial or through to a hearing? So there's obviously a lot of pretrial steps, and the timing of that depends on how quickly the file may move forward and how complex it might be. But just as a sort of benchmark, we recently submitted some hearing dates to the court in Toronto for a 3-day hearing. And the court at the time, this was last month, was booking for 3-day hearings in Toronto in July and August of 2025. So there continues to be still resource constraints for the tax court in terms of getting hearings in particular locations. Toronto, Montreal, Vancouver, obviously the 3 busiest. So that the court resources available, including the timing and availability of courtrooms for in-person hearings, continues to be a ways out. And actually, that's a good segue here to talk about the development in the tax court this week with the appointment of new Chief Justice Gabrielle Saint-Hilaire, the first woman to be appointed as Chief Justice of the tax court. Of recent note as well, Justice Mike Esri was appointed to the court. Justice Esri is specialized in GST at the Department of Justice for many years. And recently, Justice Sophie Matt was appointed as the court's first associate judge. And Justice Matt had some background with the Department of Justice, and then recently was a very senior administrator at the court's administration service. So for new Chief Justice Saint-Hilaire, there appears to be a couple of main issues that the court needs to deal with at this particular moment in time, including, as we've talked about, marshaling the resources that the court is going to require for fulfilling its mandate and carrying out its mandate. This has to do with the resources that are available for the court's continued technological transformation, file management, the registry issues in terms of the resources and technology tools the registry has, and courtroom space continues to be an issue, although I understand there's a new court to be built in Montreal, and they're looking at expanding court facilities in other areas, including Toronto. So that's the first issue. The second one being the court has publicly talked about the upcoming retirements among the complement of judges in the next 2 to 3 years. And at last estimate, I think there was in a range of 10 expected retirements in the next couple of years. So the court itself, in terms of the judges, will undergo a not insignificant development in the next couple of years. So an interesting moment for Chief Justice Saint-Hilaire in her new mandate. In terms of other recent developments and progress of certain of the tax cases before the Supreme Court of Canada, we've listed here the Dow and Iris cases, those being judicial review and jurisdictional cases, whether the appropriate relief may be sought in the federal court on certain issues or whether the tax court has jurisdiction to deal with certain of these matters. Those cases were heard in tandem last November. We don't have a decision yet, and we don't yet obviously know which way the court may go in terms of the guidance that it will provide around the issue of judicial review and the jurisdiction of the 2 courts that hear various tax matters in parallel. Just as an aside, I mentioned as well for those who follow such things, but you may recall in the Collins case, the Supreme Court in the majority opinion said that in its view, the minister actually had no discretion in administering the Income Tax Act, and reasonable people can disagree about whether that's accurate or not. But there is a sort of part of this background when you're thinking about ministerial decisions and discretionary decisions, where you have those types of pressure points or the existence of discretion or not. So there could be some different views. And so we'll have to see what the Supreme Court may say in Dow and Iris. 2 other cases of note here. We have leave applications in Glencore and 329. In Glencore, this was a case dealing with the taxation of break fees. The Federal Court of Appeal had held that such fees were an inducement and were taxable under 12(1)(x) of the Act. The taxpayer is seeking leave to appeal in that case. And in 329, the Federal Court of Appeal held that there was no misuse or abuse under the GAR, where the taxpayer had implemented some steps to utilize some adjusted cost base within a corporate group, where you had an arm's length sale where the parties had bargained around how the sale could be structured. And in that case, the Crown has sought leave to appeal from that decision of the Federal Court of Appeal. So turning to some international issues, Marie-Claude, perhaps we can talk a little bit about what we're seeing in beneficial ownership and treaty interpretation in recent cases.
Yeah, we're seeing a lot of cases going to the Supreme Court, tax cases going to the Supreme Court. That's new. What we're seeing also are a lot of foreign cases that get picked up by our judiciary system. And that's something that we hadn't seen a lot before. And Hargreaves Property and Royal Bank of Canada are both example. The question in Hargreaves that the UK Court of Appeal had to decide was whether the taxpayer was liable for failure to withhold UK tax on interest paid to an non-arm's length UK company. And the issue turned on whether under domestic UK tax provision, the corporation was beneficially entitled to such income. So the court provided important knowledge on their interpretation of beneficial ownership. And for, a civilian like myself in Quebec, we always struggle with these concepts because they're foreign to us, obviously. But to the UK court, it's something very obvious, and they concluded by saying that the concept of beneficial ownership is well established. In a sense, it means ownership for the benefit of the person in question. And the court found that the corporation in Hargreaves was merely holding a legal shelf, if you will. So in that sense, they could use the principle of purposive interpretation to interpret the beneficial ownership entitlement. So that was pretty interesting because we have those concepts, beneficial ownership, and we also have the purposive interpretation in our treaty. So the way that this decision will be construed for Canadian tax purposes is to be seen, but definitely we see a lot of judges looking to other jurisdictions to help and interpret these new principles as one of the main purpose. That's something that will need a decision in Canada to help us, but those are concepts that are broadly used across the board. And rapidly in Royal Bank of Canada, it was very interesting because for them, it's the court in the UK again, and it looked at interpreting certain provision of the Canada and UK tax convention. And what they determined was that you have to look at really the words of the agreement. We had to determine whether it was effectively really royalties that were paid out. And they looked at the agreement and they said, well, if you write that it's a royalty, we have to take that into consideration. So that's something that is of note, and that comes especially in our Canadian jurisdiction where we have form over substance, right? So always a good reminder of be careful what you write in your agreements.
Yeah, agreed. Characterization questions come up so frequently, I find, these days. Okay, let's move from international and we'll bring it back to domestic, actually. So for those of you who practice in the private company space, you've probably been following with interest the DAC Investments case. This was a case in which the CRA had applied the GAR regarding the company's change of status from a CCPC to a non-CCPC. And this was relevant in respect of certain investment income earned by the company, after which the change of status was not subject to the refundable tax under Section 123.3 and was now subject to the general corporate rate reduction on its investment income under 123.4. This type of planning has obviously been shut down by the substantive CCPC rules, but for years prior to 2022, the CRA has been attacking this type of change or planning, if you want to call it that, under the GAR. And in DAC investments, in short, the tax court held that the change of corporate status was not a misuse or abuse of the Act for the purposes of the GAR. The decision of Justice Darcy in the case is lengthy and detailed. It includes an exhaustive exploration of Parliament's intent in creating the different tax rules that exist for different types of entities. And overall, the tax court held that a taxpayer's choice of entity type and the choice to be taxed under one regime with all of the, in the court's view, they called them pluses and minuses that might exist in terms of that type of regime, and that switch from one regime to another regime with its corresponding pluses and minuses was not abusive. And in fact, as the tax court points out in the later parts of its judgment, the taxpayer's choice here appeared to be in harmony with what Parliament appears to have intended, because of there are certain transition rules relating from changes of status. And so the court took this as evidence that this was not a misuse or abuse under the Act. Now that decision has been appealed very recently to the Federal Court of Appeal. So we will be considering that decision of the Federal Court of Appeal in the next 12 to 18 months, you'd expect. Staying with CCPCs, Lark Investments. So there are many of these CCPC, non-CCPC cases in the pipeline following DAC investments, Lark included. Lark, here we have a procedural decision of the tax court relating to the same non-CCPC change of status and the GAR. However, certain procedural challenges, if you want to call them that, arose in respect of the content of the Crown's reply in the matter, the facts that were admitted in the reply and were on discovery, and certain of the GAR arguments raised by the respondent. And after having gone through discovery, the taxpayer brought a motion to strike certain portions of the reply on the basis that the factual admissions couldn't match up with what the Crown was arguing from a GAR perspective. And in short, our now Chief Justice St. Hilaire held that while the respondent's GAR argument certainly was of no surprise to the taxpayer, certainly the facts assumed or admitted, which seemed to be unusual or contradictory in certain cases, and the Crown's argument on GAR actually couldn't readily be discernible from the pleadings. And the court granted the taxpayer's motion, struck portions of the reply with leave to amend within about 30 days or so. Now, interestingly, DAC Investments came out after the procedural decision in Lark, so it will be interesting to watch how DAC and the appeal will impact Lark and other non-CCPC cases that are going to follow in the next few years. All right, I'll stay on this one, Marie-Claude, in terms of recent cases on the issue of costs, an issue near and dear to my heart. So we do have a number of decisions on costs in the last few months. As those of you who follow such things, you'll know that in the last decade or more, there has been quite a body of jurisprudence the tax court has developed around cost awards. In short, larger and larger lump sum cost awards are being awarded to successful parties in the litigation. And generally, those lump sum awards are landing in the range of about 30 to 50% of the actual costs of the party to the litigation. There is always a detailed consideration by the court of the factors under Rule 147 of the General Procedure Rules. And so it's interesting to see the way that the court is dealing with the consideration of those factors. Now, if I actually start at the bottom of the list with Husky here, and this was a case in which the tax court had upheld the denial of certain treaty benefits, the lower withholding tax rate, in a securities lending arrangement. The successful Crown, in this case, on the cost considerations, had sought in the range of about $390,000, which equated to about 75% of its actual legal fees. The taxpayer in the cost submissions had offered to that a number in the range of about $260,000, being 50% of costs, was appropriate. And here the tax court awarded a higher amount, roughly about $300,000 of costs, which was about 57% of the successful Crown's costs. Now, interestingly, in Husky, there were some questions raised in the party submissions around conduct of the parties. And the court very helpfully sort of explained that, look, the normal back and forth that you have in litigation with each side protecting or advancing its positions, that's not the type of unusual conduct that elevated cost awards are directed to. So that's actually leads us to Marine and Madison, where we have in these other two decisions a more sort of full consideration by the court around conduct of the parties, and in particular, some troubling conduct that the court felt impacted the amount of costs to be awarded. So in Madison Pacific, we'll go there first. This is a case that was the tax court's first decision on loss trading cases, decided by the court after the Supreme Court's decision in Dean's Knight. In this case, the successful Crown had sought costs in the range of about $400,000, equating to roughly about 35% of the Crown's actual costs. And here, in this case, speaking of conduct of the participants, the court was particularly concerned that during the trial, the taxpayer had spent an excessive amount of time at trial regarding the facts and circumstances of the purposes of the transactions in the series. But in argument, the taxpayer had quickly conceded that the sole purpose was to achieve the tax benefit, and you had an avoidance transaction. And the court stated that such a, call it, zealous pursuit of what was, in the court's view, I'm using a phrase here, an obviously losing argument should be addressed in a higher award of costs. And so the tax court said it was going to award the full $400,000, the 35% of actual costs sought by the Crown. And the court throws away a comment where it says, oh, and in fact, I would have ordered a higher amount had the party asked for it. So a bit of a nuance there to keep in mind. And then in Marine Atlantic, here the taxpayer had succeeded in a GST appeal regarding its entitlement to input tax credits. And on the issue of costs, the tax court considered a number of factors, including the conduct of counsel during the matter. And in this particular case, the court was very concerned about improper delay caused by counsel by refusing to follow an agreement that had been made between the parties. There apparently was, in the court's view, an attempted trial by ambush by the party seeking to introduce affidavit evidence very late in the process. Apparently, the party had sought to basically re-argue the decision in the cost submissions that they made to the court. And concerningly, from the court's perspective, counsel had refused to express any contrition in respect of the conduct that the court had identified as being problematic. So the court awarded about 60% of actual legal fees for the successful taxpayer. The total cost award, including disbursements and unrecoverable GST, was just under $900,000. So we do see more and more of those cost considerations coming into play, and the court continues to develop a very detailed consideration of the ways that the factors will point to one way or the other. Staying with procedural issues, Marie-Claude, I think we're going to you for some developments in terms of reassessments and the timing, speaking of statute barred dates.
Yeah, thanks, Tim. In the interest of time, I'll just mention for T-Pine that the Crown may raise a new argument, even if you're already late in the game in your litigation process. The courts have been very lenient in terms of what can be amended, what can be added. There are some guidelines like reassessment not allowed beyond the expiry of the normal reassessment period. But tax litigation it used to be very easy type of litigation now has become a lot more contentious. So I'll turn it over to you maybe to say a few words on CHAD and our compliance orders.
Yeah, gladly. And I'm cognizant of the time as well, so we'll go through this one quickly. But CHAD is a recent case on compliance orders under 231.7. In this particular case, the CRA had sought information relating to some non-resident trusts and corporations with which the taxpayer was involved in some way. The taxpayer, upon receipt of an audit request for documents, had asked the non-resident trusts and corporations, but had received a response from the directors or trustees that said, we're not providing anything to you. And a compliance order application followed from the Crown in the federal court. The court declined to issue the compliance order. They said, in fact, well, look, what you have to be directing your request to are documents that are actually in the possession and control of the taxpayer. And here, although the taxpayer had requested and had some sort of role vis-a-vis the non-resident trusts and corporations, there were a collection of documents that were just simply either not in existence or not in control of the taxpayer. And the taxpayer had, in the court's view, made a reasonable effort to try and obtain the documents. And so the request for the compliance order was dismissed. The only disclosure that the court required was that certain documents over which the taxpayer had claimed solicitor-client privilege relating to some asset protection planning and that the taxpayer did have possession of were required to be provided to the court under seal so the court could make a determination as to whether they were solicitor-client privilege or not. And if they were not, they were going to be disclosed to the CRA. All right. Okay, shall we go then to best practices for tax dispute management? I think, Marie-Claude, I have a question to start off for you on this one. And maybe we'll just start at a high level to talk about some of the sort of best practices and advice that you give to clients regarding the stage before a formal audit is started, what they can do in terms of pre-audit prep to make sure that they are ready if and when they get that audit letter.
Yeah, absolutely. Before the audit, people often forget, and it's a very important time to prepare, especially when you went through a transaction, you have all the documentation, you have the solicitor client documentation, make sure that they're well labeled, and make sure that if you have departing employees, Tim, that they have documented the transaction and how it went on, and maybe the purpose. We keep talking about purpose, the purpose behind the transaction. We need to go beyond the simple corporate documentation, and obviously understanding the risk and what your company's risk profile is, and whether you have compliance requirements of disclosure that we mentioned before. So those are all things that always best to prepare before the audit than to be caught off guard, if you will. And if we move through to during the audit, Tim, we see here protect your position. What do you mean by protecting our position? What should we do when at the start of an audit?
Yeah. So protect your position or advancing your position, as we talked about, in our view, is the type of strategy and approach you want to utilize, because the CRA's initial request, we see this across many, if not all files, will be very, very broad requests, will ask for information both for the identified tax years under issue, but may also include requests for corporate information. I see this all the time in the private company context for contents of minute books that may go back many, many years into the past. So there's a scoping issue that arises there. There are issues in which some of the documents may be getting to the level, around sort of issues around relevance. And in order to bring that back in terms of protecting your position, certainly a strategy that we use is to have discussions with the audit team, have full and transparent communications with the audit team to talk about what is most important to you as we work through all of these requests that you have sent over. So in other words, we always talk a lot about, are there ways that we can get to sampling of certain collections of documents, invoices, et cetera? Are there certain years that we can narrow down on? An issue that I've seen come up at least a couple of times in the last year or so is the CRA had asked for information and documents that had been provided during a previous audit, and yet they came back during the current audit and were asking for old information. So unusual in that sense. And then obviously, what are the sorts of issues that we can focus on so that we're directing our disclosure and our responses through the prism of an understanding of what the CRA is looking for. In terms of disclosure not required, this is always critical. First of all, you have the relevance threshold and privilege. On several files in which I was not involved at the initial stages, regrettably, I found when I was brought onto the file that there were certain privileged information and documents that had been disclosed during the audit. In particular, things like legal invoices, which prima facie are subject to solicitor-client privilege, because those invoices may contain work descriptions and details of discussions, which could be the disclosure of certain legal advice, which would obviously be solicitor-client privilege. So, there's always you want to have sort of an important distinction around protecting your position, because certain information or documents may be old. It might have been covered by a previous audit. It also may not be required to be disclosed. So those are things to make sure that you're sort of keeping the audit going in the right direction and disclosing what's required, but also nothing is being disclosed that doesn't need to be disclosed.
And if I may, Tim, two things. Know your right. Know when to push back on the information requests. Have one person in charge of the audit. Really limit the number of people that they have access to. And don't assume that they understand your industry. So many times I had to sit down with auditors or objection officers, unfortunately, and prepare a PowerPoint presentation on the industry and how it works. A lot of the time, those things could have been avoided at the get-go from the start of the audit. So if the more information on how your specific industry works to really educate your auditor, the best practice or best tip I could give.
That's great. Let's keep moving here. Okay, the importance of disclosure. Marie-Claude, maybe perhaps you can just give us a view on are there optimal times for obtaining disclosure from the CRA through the various, stages of the life cycle of an audit or a tax dispute?
Yeah, absolutely. Automatically, when the audit closes, you have to request the audit report and they're obligated to give it to you. You don't have to go through the official access to information request strategy. Then you may want to do a formal access to information to really gather all of the correspondence documents, especially if you know that you're going to objection, because it may take a lot of time. And one tip that I like to give is, cut your access to information request in smaller parts. That way they process it faster. So those are the things that need to be done automatically after an audit. And we spoke about audit objection. There may be cases, Tim, that we want to go straight to court and not go through objection. What are the main tips you give to your clients when they face that question?
Yeah, well, to build on what you referred to earlier, Marie-Claude, objections for large corporations take a tremendously long time to resolve with the CRA's appeals division. So certainly there's a timing issue in terms of how long you'll have to invest with the CRA at the objection stage. There is the availability, the right to go directly to tax court after 90 days after you file an objection for income tax matters and 180 days for GST. In certain of these cases, in particular, if there has been a headquarters referral at some point in the audit or during the objection process, if you explore it a little bit, to the extent that there's a view that's been communicated from headquarters to the audit team, very unusual that there would be any changes there. And certainly for those types of cases where the case itself might be on the list of important cases, for example, the non-CCPC planning cases, these are cases in which you're probably not going to get the relief that you're seeking outside of getting a court to rule on the facts and circumstances and law in your particular case. So that might be the type of case where you say, this is a question that both parties are going to need an answer from the tax court on. And maybe just finally to finish up on this slide, the question that I get frequently as well in terms of utilizing the process, should we move forward quickly because of the potential for settlement? And the considerations are different at audit and objection and the considerations for settlement on a tax court appeal. The Department of Justice will be concerned with different issues around witnesses, evidentiary issues, documentary disclosure, what type of evidence the DOJ might be able to adduce at the hearing in a trial of a matter. And that same considerations apply from the taxpayer side. And that's not always what sort of might be driving the conversation at audit or objection. So certainly potential for settlement is there. I have had some good success of recently where we've had some very fulfilling and productive discussions with the Department of Justice on some tax court files where we've been able to find some middle grounds. So always good there. I know that we're running towards the top of the hour. I'll just want to just sort of deal quickly with AI and tax audits. The long story short here is that we don't know where we are with AI and tax audits. But if you go to ChatGPT's image generator and you punch in nerdy tax lawyer, you get an image like this where, I don't know, it's like coincidentally, I'm wearing a red tie. I totally forgot about that. But I don't have two ties on, it seems. But these are the kinds of things that the technology is able to do in terms of having some fun with it. By the way, when you punch in nerdy tax lawyer, you can do it over and over and over again, and the image you get back is a man every time. If you punch in nerdy tax lawyer woman, then you'll get an image of a woman. And the one I had to do that for some reason. She had 3 hands, so I think the technology shows its imperfections quite quickly when you're using it. But here, this isn't the trivia portion of the show. This is just some recent sort of queries or prompts that I've punched into to Chat GPT, including how will AI be used in tax audits? And certainly there were some issues that the CRA or the Chat GPT came up with around ability to identify risk, processing of data, potential responses or directions for an audit. So, kind of interesting there that ChatGPT itself has taken the publicly available data and can formulate an answer in seconds on that kind of thing. Why is this important? Well, clearly, computing power and data are critical for the screening criteria that the CRA is going to be using for determining where to put audit resources. We've seen that in the last number of years around entities and risk profile. In the RPA context, you want to asset thresholds or entity thresholds. There's also the CRA's postal code project where they're comparing household income across postal codes to determine if there's any anomalies there. Large case files are revenue-based activities. You have certain sectors, industry sectors that are subject to more scrutiny, construction contractors, real estate, cryptocurrency trading in the last couple of years. And obviously, as we talked about earlier, the disclosures that are required now are going to be driving where the CRA is detecting non-compliance or where to put resources. So let's continue on here. Okay, most importantly, look, this, the IRS in the U.S. and certain states in the U.S. have stated publicly that they are using AI to go after non-compliance. And you have a Government Accountability Office report very recently saying that in the U.S., AI is going to help the IRS close the tax gap by detecting non-compliance. Some other resources for you here. CTF Perspectives on Tax Policy just published an issue on AI and tax. I recommend it to you. In Canada, we have a proposed Artificial Intelligence and Data Act. The courts themselves are coming out with guidance, in particular these guardrails. The federal court published some information recently, the Law Society of Ontario as well. For our CPA friends on the call today, CPA Canada and CPA Ontario have published recent reports. And we continue to get warnings from the courts in this Zhang and Chen case, where a counsel in litigation had run a matter through a generator to create a written argument and didn't check the sites, and the ChatGPT or whatever the tool was had hallucinated sites, and the court severely cautioned the parties and said there needs to be a human involved in all of this. And that brings me to my final slide. How do I manage a government tax audit? Well, down at 6th on the list, seek professional advice, which seems very prudent. And as well, ChatGPT itself in a paper published a few years ago said, in its view, machines will never replace humans. And by the way, as of Monday, I ran the prompt through ChatGPT, will AI replace tax lawyers and will AI replace CFOs? The answer in both times was no. So we'll conclude there. Questions? We're at the top of the hour. For those who want to spend a minute or so, what do we have here? Marie-Claude, do you have questions that we're going to go to in the remaining sort of minute we have?
Right now, I don't see any in the chat, Tim, but maybe you could tell us, has the Canadian government advised on their intention of really involving AIs in their audit? They don't seem to have a clear plan. Am I mistaken?
No, that's correct. There's nothing, we don't have specific guidelines yet. And I think a lot of parties that are starting to implement AI tools in their work are trying to figure out what those guardrails are. We see it from the Law Society, we see it from the CPA organizations. I can tell you that Fasken has an internal AI policy about responsible use that's posted internally, and we talk about it at meetings about how AI will be involved in the delivery of legal services. From the CRA's perspective, I would expect that it would be appropriate for guidance to be provided at some point, and we'll also need to know how it is being used in audits, because that will eventually be the subject of questions to the audit team, and as well questions on examination for discovery about how AI may have been used at some point in the audit or in the minister's assessing process.
Yeah, that's what I'm worried about. We do have one question here, Tim. Do you recommend requesting for the audit report after receiving an audit conclusion letter where there is no dispute or the disputed issue has been clearly communicated? It's a good one.
Yeah, I would recommend the request for the audit report in that type of situation. There could be multiple years at issue, or maybe there's some issues explored that the CRA may not have made any adjustments for in that particular year, but you would want to have some information in your file to, in case you want to have that for future reference as well. Getting all those materials, as I say, I've had experience in recent years where the CRA audit came back and they were asking about information and requests that had been actually fulfilled in a previous audit back in the past. So the more that you have in your file, the better. It could be as well that you may not have disagreed with certain of the adjustments in this particular year, maybe around the quantum of losses, for example, but maybe that could become an issue in later years. So the more information you have in your file, then the better, I think.
One last question, Tim. In personal income tax cases, what's the approximate percentage of cases that are referred to the IRS for collection?
Good question. So we have someone from the U.S., or at least someone with U.S. Tax considerations on the call. I don't know off the top of my head. The significant portion of the tax gap in the U.S., I think in the range of 75 to 80%, relates to personal tax non-compliance. Now, we know that the IRS has far fewer auditors. And so those audits, I think just as a sort of raw number, are far fewer than we may expect in Canada. In terms of how active the IRS is. Now, again, this is a whole other discussion, but the US system also has significant penalties that don't exist in the Canadian context. And so compliance in the US might be driven more by the risk of the imposition of penalties, as opposed to sort of more of a detection issue where it's only on an audit that you could run into those issues. But specifically in terms of the percentage, I'm not sure, but happy to follow up afterwards if this question needs exploring a little more.
So I think that is it in terms of questions, Tim. I wanted to thank all of our audience, and I know you wanted to say a few last words.
Yes, gladly. Thanks, Marie-Claude. And on behalf of Marie-Claude and I and all of Fasken, I want to thank everyone for joining us today. On the screen here, we do have two QR codes for you. One is for our survey on the one side, and the other is for Ontario and Quebec CPD certificates. Links, I believe, are also available in the chat. And for the BC viewers, the Law Society of BC title is included or will be added to the chat as well. So I realize we've gone a little bit over. As you can see, Marie-Claude and I both very professionally passionate about tax disputes, tax dispute management, and current issues in tax disputes. So we really enjoyed sharing your lunch hour with you or your morning with you if you're on the West Coast today. Thank you so much for joining us, and we look forward to connecting with you again in the future, and have a great morning or afternoon.